Welcome to Libertex. Are we entering the early stages of a bull market for gold? In this February gold price forecast video update, we will break down the fundamental and technical analysis for gold prices to give you a clear picture of what to expect for the rest of the month when it comes to trading the yellow metal. Gold prices appear to be in a consolidation phase despite a decrease in the strength of the US dollar, so we'll take a closer look at why many traders are anticipating a move to the upside in the short term, giving you the levels of support and resistance to keep an eye out for to trade gold throughout the month of February. So let's jump straight into it. Gold appears to be back in bull territory, and the moves throughout the coming days and weeks will be critical to understand if gold is to make a sustainable break to the upside. As we've touched on previously, gold tends to trade inversely to the dollar. As the dollar decreases in value, traders have historically moved their capital into gold as a safe haven asset to hedge against volatility and realize gains even in the face of a sliding USD. The USD on the DXY is currently trading near weekly lows, deflating in value as a drop in US Treasury yields increased anxiety about the dollar, coming off of the increased likelihood of a Democratic stimulus deal that seems to slowly but surely be coming into the stages of finalization. The continuous uncertainty over a strong recovery in 2021 for the US economy, paired with the effects of inflation a large stimulus package would bring, are all being weighed into the price of gold. Furthermore, the US is not the only catalyst for uncertainty that could usher more money into gold. The Eurozone PMI numbers fell from 49.1 in December to 47.5 in January, amidst extended lockdowns and tighter restrictions surrounding the ongoing COVID situation. As a result of these circumstances, many analysts are predicting increased inflation, not only in the US, but throughout the world, which will make fiat currency vulnerable to the downside, therefore strengthening the price of gold. There are some key events in February to watch out for in the short term for gold traders, however. The Chinese New Year is just on the horizon, and markets tend to be on the quiet side. However, gold has a history of gaining energy following this event. Another event this month is a bank holiday on February 15th in the US for President's Day. These two events can thin out liquidity, which can potentially cause exaggerated moves to the upside following the events. As a result, traders are definitely going to want to keep a close eye on the markets on February 15th in particular, in order to potentially ride a wave of momentum. So now let's take a look at the technical analysis for gold to see exactly where we are with gold for the month of February, and where gold can potentially go from here. Alright, so we are now in the Libertex terminal looking at gold, and we can see that gold prices are attempting to make a bigger move towards the 50-day EMA. But are likely to face some strong resistance around 1856 if the movement back to the upside continues. We saw gold climb past this earlier, but ultimately came back down to support levels where gold was granted a reversal into the current rally we are now experiencing as of February 10th. If gold can break past a resistance point at around 1849, some short-term support can be found right around the 1854 level, which is very close to the 10-day moving average. If gold can continue this push and rise beyond the 200 SMA, the next heavy resistance targets are found between 1869 and 1876 levels, but further developments from the overall market, including dollar weakness and stimulus, could very well bring gold back into the $1,900 range, where the bulls would like to take gold comfortably into for the rest of February. Where gold currently sits, there is some nice support at the 1829 level, and a break below this price could send gold back down, but some consolidation here could create a nice bounce back to the upside. In addition, the short-term oscillators currently indicate positive sentiment. Taking a look at the MACD, it's now in a positive region while the RSI sits comfortably in bullish territory. Additionally, the stochastic oscillator is moving positive, which could help usher in greater support for new price gains. Overall, gold is looking fairly bullish in the short term, but for a bigger swing to the upside, a move past this resistance at 1876 must be broken. Will you be trading gold this month? If so, let us know your positions and what you'll be looking out for in the comments to join the conversation with our analysts. To trade gold, silver, as well as other metals, stocks, crypto, forex, and more, head over to Libertex and try out trading on our platform without hassle, annoying fees, and lag times. Libertex locks in your positions with speed and security so that you can make the most of the markets and trade for more. If you enjoyed this gold update for February, we'd highly appreciate it if you like this video, subscribe to our channel, and hit the notification bell to stay ahead of the trends. Your support enables us to make more content, and we'd love to have you on board in our growing family of traders. As always, we wish you a great week and month in the markets. Thanks for watching.